Hello guys, welcome back to another crypto analysis video. It's the first one for this year, so happy new year, my lovely people. Hope everyone had a fantastic holiday, but now it's time to go back on the charts and start thriving again and try to make it big for this year. It's 2026. If you start early, maybe we can finish a bit early, with some good profits. So let's see how we've been. We see the market, it looks green for this week. Maybe it's time for that relief rally that everyone is expecting or was expecting to have in November, December. So let's see what the chart says. Okay, Bitcoin. So we start with the weekly. As you guys well known, we are still below the 20 for the moment. Okay, this shows the momentum in the early stages. Okay, so let's see where we are at. So last time we had this pullback, the massive pullback of the previous leg up. Okay, let's just to remind ourselves. Okay, so we had this push here on the weekly, and then we had the sell-off back into the demand zone. If we hold it, we obviously going back for another try of the top. If not, we would go below. Okay. The dump was very, very aggressive. Everyone knows and felt it probably with their altcoins more than the Bitcoin itself. We tapped into the demand. We didn't hit the 50%, which I normally like to see. I like to see like multiple weeks, but the demand is really, really strong. The second time we didn't hit again this box here. We just respected like the top of this order block, or whatever, demand zone, whatever you want to call it. Okay, so we rejected every time. The first time the move was aggressive, so it went a bit into the lower demand zone, but the upcoming weeks we didn't touch this box again. So obviously there are loads of orders above that, so people are happy to buy a bit more expensive and trying to push the price higher, the bulls. Okay, but what's interesting, so why we didn't do any video is because we had some chopness in the first weeks. Like I said before, I'm expecting highs and lows to be taken. Okay, so we had this initial candle here. I want to show you very, very close the candles and the story. So we had the initial drop here in the box. Okay, obviously huge weak rejection above the top of the demand zone. The upcoming week he was bullish. Obviously the bulls came back and tried to hold this zone. Then the next week the highs were taken, but as well the lows. Was a liquidation week of the highs of the lows. So these lows were taken here. I want to mark them because I want you to see properly. So these lows were taken here, and as well these highs were taken. So the market just took out liquidity. Then the next week that came, what happened? The market opened around 90K. It went up, it took the previous highs, and then it went back down, but it never took the lows. So these lows, this is the protected low. Okay, and the upcoming, this is where it becomes interesting. The upcoming week, it took the low of this week, but it never went deeper and took the previous week low. Instead, it was a doji, an indecision candle that just took the lows. And then the next one, it's interesting because it's still a doji, but it took the highs of the previous one. So these highs were taken, creating higher highs, and it never took the lows. Okay, so we have a higher low. And this week, which is the first week of January, again, we took the highs, and we have a higher low. We never took the low. So this is kind of bullish scenario starting to forming here, because we have a low, we have a high, we have a higher low, and then we have a higher high. So this kind of looks something like this. Okay, obviously we're expecting to have a lower high, a higher low, and then slowly trying to move the momentum up. So this is on weekly. Okay, so weekly starts to look bullish. Okay, we're starting to print bodies on the candles. You see the difference between this candle or this candle with this one. It shows that the buyers are coming in, they are taking the highs, they're respecting the lows. Okay, they're not happy to buy lower than this point, they're happy to buy a bit higher than this low. So we're forming higher highs and higher lows, which you want to see in a bullish market. But on daily, this is going to look much more better. Okay, because you can see clearly. Let's draw it. This is the previous weeks. Okay, you can see clearly the highs and the lows of the previous days. Okay, of the last 3 weeks, where we had the low here. Okay, then we had the high, then a low, then high, then low. Obviously now we are expecting, and for the first time we are trading above the 20. Okay, so we climb, we can see the 20 moving average is consolidating. Okay, start accumulation around this zone. Okay, and then now we're trading above the 20, and obviously as long as we stick above the 20 and we don't close below it with a candle, then the momentum is going to be on the upside. Okay, so we're expecting high high, high low, high high, high lows. Now going back to the weekly, obviously this is the accumulation zone for the daily. This is the consolidation, as we like to call it. So this is the no trade zone. If you like a day trader and you're trading on the daily time frame, you want to see a break above this area here, this support or this supply zone. We have a supply zone here. The buyers were trying to push, and then the seller took over and they sold the market. So this is very important supply zone around here. You want to see a break above or a break below this demand zone here to know exactly the direction. But this, as I wanted to tell you, are early signs of bullishness in the market. Okay, for January, we're starting strong. You see high lows, trying to get to the 93 area, which is the first wall of resistance. I'm not expecting it to be broken in the first one. We're going to have a rejection. We're going to take some liquidity here. Probably we're going to take this 94 liquidity and then have forming the next higher low, you know, to show something like that. Oh shit, come on, where is that? Trying to slowly take this high here. Okay, print this resistance, turn into the support, and then attempt the 100K, which is the massive psychological level first before everything else. We have support, supply zone, huge. Okay, loads of selling pressure in this area here. The weekly you can see it better, and we're gonna on the weekly we're gonna hit the 20 in the same time. Okay, so and the 50 is probably around here as well. I removed it for the moment, but you have the 20, the 50, the 100, 200, all of them going to the downside. Okay, so huge resistance at the 100k level. But for the beginning, it's looking good. It's looking good. The altcoins are having some green momentum as well. Injective is trying to break above, so it's good point to buy here on the daily. This is the weekly resistance, whatever. Solana. So you can see for all of them on the daily time frame, you have forming the consolidation, the accumulation zone, and starting to climb back again on above the 20, which is bullish, you know. So it's a good time to, if you have money after Christmas, to buy some, you know, because the aggressiveness of the downside is reduced. Okay, this is massive sell, but then the curve starts consolidating before it goes back up. So you can see that in the with the moving average, and as well the respecting the highs and the lows, you know, telling us this is the accumulation zone, high, low, and then it goes like this for a time before it breaks up. Okay, so it is early, but it shows signs that the market was oversold. The demand is respected. Well, I marked for Solana this level here. I went a bit extreme, but you know, it looks like this one above was holding. Never mind, always very close to the bottom. You cannot nail the bottom exactly, but you can see the consolidation before the expansion. Okay, because what initially will happen, we have the accumulation, market basically move in three phases: accumulation, manipulation, where either the top or the bottom is taken, and then you're having the real move happening either up or down. Okay, and depending on how the manipulation goes, obviously the distribution is going to be on the opposite side. So if the manipulation is on the downside, then the expansion is going to be on the top, and vice versa. Well, as I said, at the moment is it's just the accumulation zone, trying to get above the resistance. Okay, the selling pressure is so slowly slowing down, and the altcoins as well are trying to recover. Total tree, demand zone respected, as we said in the previous videos. This was the first demand zone we respected, and this one would be the next one. But if this one would, this is the bear market, definitely demand. If we're still in the bull market, then this demand should hold. Okay, and then have another attempt to the highs here. Okay, to the November 2021 highs, December 2024 highs, recent highs, which was October 2025. Let's put it here so we know for next time. These were the highs. Oh shit. Okay. So looks like we're respecting this demand zone as well. On the weekly, we're respecting the lows. You see, you have this lows respected, low, higher low, and then we're having a high and a higher high. So next would be like a higher low, and then expecting for this high to be taken and start crawling up to the almost 1 trillion, well, 925 billion. Okay, so from this leg, at least we don't know if we're gonna break above or below, but what we can expect is to have like at least a 50% correction, okay, from the sell-off. So whatever is happening next, if it's gonna go up or down, if it's gonna break the trending range above or below, before that, we need to have a retracement from the sell-off, okay? So we'll have at least the golden pocket hit, at least 50% before anything else happens, before we go there or we go back down, okay? So before we go there, from here we go either this way, either this way. But before that happens, the market has to give back at least 50% of the move, okay? Because this is what's happening normally. If you look like before, okay, you have the sell-off, but then the market will have to correct to the sell, okay, and have to give back. We have the sell-off here. Obviously, this demand here holds in the beginning, and the recovery was much more faster. This one is going to be slower, but you will have to give back at least 50%, okay? At least 50%, like it give here. So yeah, this is it for the moment. With Bitcoin the same, okay? You have the sell-off like here, okay? Take the fib. Where is my discount? Discount, there we go. That's not this one. But never mind, you know Fibonacci. So okay, you had the sell-off, the initial push down, then the market recovered at least 50%, and from there it went up, but it did gave back at least 50%, okay, from the sell-off. So this one I'm expecting every time to happen, okay? Before every sell-off, the market will give back 50%, okay? Sell, or even with the buys, okay? Even the sell, then it gives 50%, sell, they give 50%, and after that it decides where it wants to go, okay? So yeah, enjoy the recovery. It's a good time to accumulate now. The candles are starting to print with bodies instead of wicks and rejection and liquidity taken and all this crap, okay? So we start forming structure on the market. We can see printing the higher highs, the higher lows. And this is when you want to become active and start accumulating whatever shit coins that you want to accumulate. Tau, we were right with the demand as well. We marked the 200, and obviously Doc bought here, where I said don't buy. It's the bloody. It's not still a discount. He bought at 300, but I know he bought at 200 as well, so he's somewhere in the middle here. Well, he bought, I think, under as well, around $80, so he should be fine, whatever he has. So yeah, we start even Tau bullish above the 20. Probably now he's gonna have like giving back like half of the move before we go up. Okay, so giving back the discount, giving the retracement. Okay, so 50% he has to give back from what it made. So the next leg will form with a higher low, and then again forming higher highs. Okay, the market won't go in a straight line. Okay, so yeah, that's it. Be careful what coins you're accumulating. Stick with the main ones. Buy your Solanas, buy your BNBs. You know, the OG coins, I would say. Even Atom has respecting the demand zone that I've marked. Beautifully demand zone. So very, very accurate with this one. I'm happy with. Sui, crab cake was alright. I said the demand is going to be here. For the moment, we didn't hit it, but that doesn't mean I'm not expecting it to go here. I'm expecting it to be £1. This is still, for me, it's very expensive. It's not in the discount zone that I wanted to be. Sui, but still 1.3, 1.4 is better than 5. Okay, so start buying small. If we're having a bear market, then we have to reject this zone around here, this demand zone here, this 20, and then go back to the one. Time will tell. Okay, it will still forming structure with Sui as well. But you see the lows are being respected. Okay, low, higher low, higher low, higher low. So you're expecting it to hold and start giving at least 50% up. Okay, it needs to give back at least 50%. So expecting it to go up to 2.8 before anything else happens. Okay, so maybe even higher, and then this weekly resistance holding and then come back down. Who knows? I will see. At the moment, it's just accumulating this in this demand zone we have in this huge candle here on the weekly. So it looks like it's loads of orders around this area for Sui. Okay, guys. Yeah, be careful what you buy. Gold is still above the 20 on the weekly. I'm following it. Unless, well, we can see already start giving massive sells every few weeks. So once this one goes below the 20, it is game over, and then people will start taking the profits they made in gold since the run started at around £2,000, 1,800 up to, this is massive. You will have to give some discount. You will have to give at least 50% from this last leg, before anything else. You can see it's oversold on the weekly, heavily overbought, sorry. It needs to come back down. You can see already printing from $3,000 start printing bearish. Now we're having the divergence as well here with the higher forming higher highs, but the RSI shows lower highs. Okay, so this is very, very bearish, because this is similar with what happened with Bitcoin. If you look at the Bitcoin, we had the same situation. We're forming higher highs here, and then the RSI was showing bearish, needs to go down. So it was a divergence here. Okay, look, you see, we are doing higher highs here. Okay, but the RSI showed us that this is fake. This has to go down. This is overbought. Okay, and this is what happened lately. We had the sell-off. So expect with gold to have the same effect. It will go down below the 20. It will go down. How long, we don't know, but it will go down because it's showing the bearish. You see, same scenario. This won't fail me. Believe me. This divergence on the weekly, it's really, really strong, and this is probably the first move that will start the crashing of this crazy price for gold. This is bearish, very, very bearish. This will go down. So obviously the profits will go into what I believe to be Bitcoin. And you can see already small movements from this moving happening. Okay, so let's see how long did I spoke for. I want to finish this. Okay, Yeah, so I'll keep you updated, guys. Watch gold, watch Bitcoin. Be careful what crap coins you're buying. Okay, use the stop loss. Stop buying coins on exchanges without using stop losses. All right, so please don't lose the money as much as last year. Investing using your head, using your demand zones, using your weekly higher time frames, daily time frames if you are like a trader and you want to use the momentum of Bitcoin and just trade altcoins. Just don't buy any crap. Apologize for my voice. I had the virus very, very bad recently, so my voice would sound a bit crap. Okay, so enjoy this push, and I'll keep you updated with everything. Hope you guys enjoyed and learned something. Let's make this year very, very positive and profitable for everyone. Have a lovely weekend and be blessed. Take care, guys.